All right, today we are diving into one of Singapore's most anticipated new launches, River Modern Condominium. Now, everyone knows River Valley is a prime market, right? So the big question is this a genuinely smart investment or is it just a lot of hype? Let's find out.
And that's really the core of it, isn't it? I mean, prices in the core central region, the CCR, are already sky high. So every investor is asking the same thing. Does this project actually make financial sense when you get down to it?
So, are we looking at a really solid, balanced investment here? Or are you just going to be paying a premium for a shiny new name? Well, that's exactly what we're here to figure out. We're going to break it all down with a clear, data-driven analysis.
Okay, so here's our game plan. We'll kick things off with the basics, location, price, all that good stuff. Then we'll get into the rental numbers and see how it stacks up against its neighbors. After that, we'll look at the 10-year outlook and wrap it all up with our final investment verdict. Let's get started.
All right, first up, a new riverfront contender. Let's introduce you to River Modern Condominium. This isn't just any old condo. It's a major new player in the super desirable District 9, right on the Singapore River. So, let's get into the nitty-gritty. The location, the price, and the pedigree. These are the fundamental facts you absolutely need to know. Okay, looking at the core details, a couple of things really pop. I mean, a District 9 address? Check. A top-tier developer like GuocoLand? Check. But here's the real kicker, the absolute game changer. Direct, sheltered access to Great World MRT. You know, having that riverside lifestyle is amazing, but when you combine it with that kind of pure convenience, that's a seriously powerful one-two punch. Now, a location and amenities list like that, you know it's going to come with a certain price tag. So let's not beat around the bush, let's talk about the numbers. We're looking at an indicative price point right around $3,000 per square foot. And yeah, that's a big number for sure. But honestly, it's pretty much par for the course for a brand new launch in the CCR these days, especially for one that's literally connected to the MRT. Okay, now for the part every investor is waiting for. Does the rental income actually justify that price tag? Let's crunch the numbers and analyze the investment yield. Before we get to the yield, you have to know who's going to be renting from you, right? The rental demand here looks rock solid. You've got your expat professionals who need to be close to the CBD and Orchard. Then you have couples who want that cool, convenient lifestyle. And, of course, small families who are going to love the amenities and that all-important MRT access. It's a really strong tenant mix. So, if we zero in on a typical two-bedroom unit, which is a classic investment choice, what kind of return are we actually looking at? Well, the numbers point to a pretty healthy and sustainable yield. And here it is, a projected gross rental yield somewhere between 3.8 and 4.2%. Now, for a brand spanking new premium CCR property, that's a really solid figure. We're not talking about some speculative get-rich-quick number here. This is a healthy, sustainable return. But, you know, a number on its own doesn't really tell you the whole story. To really get a feel for its value, we need to put it head-to-head with its neighbors. So let's see how it stacks up. First up, let's talk about River Green. This is basically your lower entry point into the neighborhood. You might squeeze out a slightly higher rental yield at the start, but, and there's always a but, you're trading off for that. We're talking more compact units, and you won't get all those premium bells and whistles. Then, at the complete other end of the spectrum, you've got Promenade Peak. This is the big, iconic, ultra-premium high-rise. The potential for capital gains here could be huge if the market soars. But that higher price tag also means it's a bit more volatile. It feels the bumps a lot more if the economy slows down. So, this table really sums it all up. Look at where River Modern sits. The price, right in the middle for the CCR. Not the cheapest, but definitely not the priciest. The yield is competitive. The lifestyle factor with the river and park is a huge plus. And that direct MRT link, that makes it a catch for a super wide resale audience from investors to families. You see, it's really carving out its niche as the balanced, sweet spot option. Okay, enough about today. Let's shift gears and play the long game. What's the capital growth potential looking like over the next 10 years? So, let's map this out. You buy in 2026. For the first 5 years or so, it's about steady, predictable growth. You're just building up that equity. But the 10-year mark, that's where things get really interesting. By then, the whole Thompson East Coast line is going to be fully up and running. And think about it. They're not making any more riverfront land. That scarcity factor is going to kick in big time. And that's what could really push the value up.
Okay, we've covered the location, the price, the rental yield, and the tenure outlook. It's time to put all the pieces together and give our final investment verdict. So who should be looking at River Modern? So what's the bottom line? It's this. River Modern is not a speculative, high-risk, high-return kind of play. Not at all. Think of it as a defensive quality investment. The main goal here isn't to swing for the fences. It's about stability and preserving your capital in an unbeatable location. And what exactly do we mean by a defensive strategy? Well, it's pretty simple. Step 1, you're focused on protecting your initial investment. Step 2, you take advantage of that super stable rental demand we talked about. Step 3, you're targeting a strong resale value down the road because you're investing in a location that, let's be honest, just ages like fine wine. So who's the perfect match for this kind of property? It's really for buyers who value a few key things. People who prioritize capital preservation. Those who want that reliable, stable rental demand. Investors who are playing the long game for strong resale prospects. And ultimately, anyone who wants to own a piece of a prime location that has that enduring, timeless appeal. If you're nodding along to this list, then this is probably for you. At the end of the day, it really comes down to this. River Modern stands out for its fantastic risk-adjusted balance. Sure, other places might tempt you with a slightly higher yield or a flashier upside, but the real strength here is how it pulls everything together. Convenience, lifestyle, quality into one sensible, well-rounded package.
And so that leaves us with one final big question. And this one is really for you to answer. In the market we're in right now, is a defensive, high-quality investment the right move for your portfolio? Something to think about.